Hi there and welcome to my channel Simply Stocks, and today I'm going to talk about the markets, the small cap and the large cap market, as to how the markets are behaving, and two or three stocks that look like doing well over the next few months. So we'll discuss about that. So let's get started. First of all, disclaimer that this is not a stock recommendation. That I'm not a member of the NSE and BSC, and whatever decisions that you take with respect to the markets or stocks, kindly do consult your financial advisor, do your own analysis and then take a call. This is purely my experience into the market over the last 11-12 years that is pertaining into bringing this knowledge to you as to what I understand about the market and what my presumptions are about the market. And this is not at all an advice with respect to investments. Remember that any investments that you do in any asset class is laden with the risk, and there is market risk attached to anything of that sort. So before I talk about the markets, there's more requests. Can you support me on Patreon? Once you do that, help me grow the channel, help you also ask me questions and eke out answers in greater detail. You'll have access to my portfolio. You'll have analysis on various companies, fundamental analysis as to what the companies are doing, how the numbers are panning out. We have discussions on domestic and global markets, economy, and how the economies are working out. Answer to all the queries that you have, and sectoral analysis. If there is a sector that is looking like doing well over a period of time, specific sector analysis, sector talks are also done there. So there are different podcasts over there, so you can support me there or be a member on WhatsApp as well. You need to email me for that, for an yearly membership. Now let's just discuss about the markets, and first of all let's just discuss about the Nifty. And last time around, about a week back, I did discuss that when we went to 19,200 levels, we were in a situation where it seemed like that there is massive support, and this is what I was talking about. So basically, if you see on the charts, then if you look at it from a 3 months perspective, you'll have an understanding that from here on in, from these levels of 19,200 or so, the market has bottomed out. So if you see here, 19,200 came on 25th of August. About a week from there in, we went to 19,200, 250 again, and we have retraced. So there has been a double bottom sort of formation out here, and then a huge breakout that has taken place. Now our support, a very short term support, lies around 19,500, 19,600 levels. I think 19,600, 19,550 should hold. In terms of I would say the 200 DMA, we are looking at a situation, the 200 DMA is around 18,400, 500. So as long as we are above 18,500 levels or so, we are fine. But one caution for you all is this, which is the RSI. So RSI was doing okay. I mean, it was doing fine around the 65, 66 levels, round about here, 60 to 66, then went to 70, 72 and dropped down. Now the RSI blasted to around 78, 79 earlier, and then we had a little bit of retracement. So I believe that on a very short term basis, say a week to 10 days, 7 to 10 trading sessions, we could see either consolidation or a little bit of decline. So we could see levels of 19,600, 650 come in, and there could be a 2-3% decline in the small cap index as well, or the BSC 500 that I look at, Nifty 500 basically. So on the Nifty, I see 19,600 coming in the next week, 10 days, and then another round of up move to begin. Whereas if you look at it on the other side, if you look at it on the Nifty 500, there could still be a little bit of up move. So as long as the Nifty revolves in a 300-400 band and do not fall more than 400 points, more than 2%, then we are fine with the mid and small caps, because they'll continue to shine. Now whether we'll reach 20,000, I think we probably will touch there or go just above it and then correct, but the correction could come in next week. That's my assessment on the larger market, that's the Nifty 50. When you talk about the Nifty 500, and this is the chart of it, it has broken out, and we have seen a situation where, let me just open up Nifty 500. Just that. So if we look at Nifty 500, it's around 17,000. Let me just open that up on money control. Uh, So if you look at Nifty 500, 17,500, basically it was hovering around 16,700 to 17,000 levels, and then has broken out. I believe that as long as 17,000 levels are maintained, we are fine with the small caps and the mid cap stocks. If you look at it, if you see here, 16,995 is your 20-day moving average, simple moving average. 16,885 is your 50-day simple moving average. Basically 16,700 is what I'm looking at. If 16,700 hold on, then we are looking at a situation where the market is probably headed much higher from these levels. Yes, we have gone up big time. So if you look at it, we have gone up some 25-30% from the lows in March. On the index itself, there are stocks that have gone up 3-4x. But you have to pick sectors, you have to pick stocks in order to make money. Now it's not going to be a seminal rally or a complete rally in all the baskets. It won't happen like that. We are going to see we are going to have a situation where specific stocks will continue to perform, they'll correct and they'll perform. So I bring to you three stocks, and you would have seen it here: Kei Industries, Kpi Green and NCC, which look good on charts from a shorter term point of view. Again, this is purely for you to analyze these companies and then take a call by yourself, and this is not recommendation of any kind. But if you look at, let's begin with Kei Industries. It came out with subdued set of numbers last time around. So what we saw last time was the fact that in the June quarter, they had come out with, on a, let's see, on a consolidated basis, 1780 crores of sales versus 1565. Sales were fine, but if you look at on the operational front, there wasn't a huge growth. 160 crores came out in June 22 and 78 crores this time around. So margins did not expand at all. In fact, it has remained 10% since December 21, and that really soured the you can say environment, and the stock fell sharply. So if you look at on the charts as well here, what we saw in July after the results, that was around 2600 or so, the stock, and fell sharply to 2200, 2300, even 2280, and now has recovered. I believe that from next quarter onwards, numbers should improve, and the stock is nicely poised. You have support around 2400. So what you can do is, probably if you get a 2-3% dip, 2%, 2.5% dip from here, those are very good levels to probably get into from a 6 months perspective for a decent return. I won't give you targets or anything, but it's looking good. Keep relevant stop losses in that respect. So if you really want a specific stop loss in here, so if you look at moving averages, I normally keep stop losses looking at the moving averages. In terms of exponential moving average, we have a support around 2460. So probably if you buy here, your stop loss is 2460, and a decent upside will be there. So these are decent levels to get into something like Kei Industries. Second in this list is Kpi Green, which has been performing for the last couple of years, has been doing extremely well for 7-8 quarters with respect to numbers. If you look at it from around 57 crores in September 21, now quarterly sales have gone up to 190 crores or so. Even in June quarter, they had a good jump. This was a jump of 60%, 50-55% from 122 crores. The sales have jumped to 190 crores with margins of 37%. I believe that the run rate should continue as long as they are getting the orders, and the way Our government is pushing for renewable energy space. I think this could just continue to perform 33 crores net profit versus 22 crores last time around. So a decent numbers on the bottom line. On the top line, I think there's a decent upside that is possible. Stock went up post the results from around 850 levels, 840, 850 levels, all the way to 950, 960, and now has declined. And now I believe that it is at attractive levels at around 850 or so. It is a 3000 crore market cap company, so kindly take that on note. Trading at reasonable valuations from a shorter term point of view as well as from long term. So people do ask me any small cap that could do extremely well over long term. Now a caveat here that if the government changes at the helm, be it at the center or the state, things could change with respect to the orders that they are getting, because the policies could change. Otherwise this could just continue and the company could become big even from this 3000 crore market cap. So that's about KPI Green. I think it should continue to perform. Your stop loss in terms of KPI Green, if I may just bring that up here on money control, then we'll have a better understanding as to where the stock is lying at the moment. 860 is its price at the moment. Even on the RSI front, it is doing okay. So it's around 60. RSI is 5560. So if you look at it, 865 is its 20 DMA, 822 is its 50 DMA. Your stop loss will be 822. Try to buy it on dips to around 850. Keep relevant stop losses. A good upside is possible by the time next results come in. Third in this list for you is NCC. I believe that NCC, with the kind of numbers that it is producing, if you look at purely on a long-term chart basis, is headed towards these levels. I think NCC is headed towards 220, 225 levels over a period of 6 to 12 months. So that's another stock. This is another stock which could be a long-term, can be accumulated from a long-term basis if you believe in the India growth story and infrastructure story, etc. At around 15 times earnings. If you look at the numbers on the June quarter, 4,400 crores of sales versus 3,300 crores of sales. So there has been a 30% jump in on the sales front. There has been a decent 30%, 35% jump with respect to profitability. If you look at profit before tax, from 180 crores it has gone to 250 crores. So numbers are very good. The stock had run up a lot but has now corrected from those 170, 175 levels. I think if you can get it around 155 to 160, those will be very decent levels. Your stop loss will be around 140, so 10% stop loss, but here the upside could be pretty decent over a 1 year period. So this is not a small, you can say, short-term trade. This is a 8 to 12 month trade that could fetch you very decent returns over that period. Again, if I open up NCC here, then you'll have an understanding as to where one can probably put a stop loss if they want to. I open this up, around 160 is the price of NCC, and if you look at it, the way it has gone up, even the 10-day moving average is around 160. So your stop loss is here 148. So that is why it is prudent to buy on a 2-3% decline rather than here, because your stop loss is far away, somewhere around 7-8%. So around 155 to 152 would be very decent levels to get into, and from a 12 months perspective, a very decent return could be possible. Again, you need to understand that the market is stretched. There could be decent declines in the market. So these are levels where if you are getting in, be assured that you could be down 5 to 7% on your investments, on your trades, because the market has run up. There's no question about it. But my target for the Nifty overall is 21,500 over the next 6 months or so. I think that is very much possible based on the fact that FY24 we are going to have Nifty earnings of around 950 rupees. So again, I mentioned that time and again on my weekend videos. that based on 950 rupees, we are trading at, even at 20,000, will be trading at somewhere around 21 times. I believe we can easily trade at 23 times if we go berserk. When you say euphoria, etc., 23 times is where the market could start topping out. So 21,800. So that's why around 21,500, 600 is a reasonable target to hope for the Nifty, and accordingly, I think the mid and small caps should also perform in accordance to where the Nifty ends up being. So this was a video on the weekend analysis of the market. Please like and subscribe my channel, hit the bell icon so that you can videos straight away when I post it. Kindly support me on Patreon. Thanks a lot for watching.